Hey, it's Mike Hambright with the Flip Nerd VIP show. Welcome back for another exciting episode. Today, my guest is Michael Conlon, a.k.a. the Main Street Millionaire. He's got a great background and story to share. Before we get started talking to Michael, let's take a moment to recognize our featured sponsors. RealtyMogul.com is an online marketplace for real estate investing, connecting borrowers and capital from accredited and institutional investors. Get a rehab loan fast and close in as little as 10 days. Rates start as low as 9%. We'd also like to thank National Real Estate Insurance Group, the nation's leading provider of insurance to the residential real estate investor market. From individual properties to large-scale investors, National Real Estate Insurance Group is ready to serve you. Please note, the views and opinions expressed by the individuals in this program do not necessarily reflect those of FlipNerd.com or any of its partners, advertisers, or affiliates. Please consult professionals before making any investment or tax decisions, as real estate investing can be risky.
How you doing?
Good, good. Thanks for being on today. So I want to learn a little bit about you. I know we've talked a little bit that you kind of evolved in your real estate investing from maybe, I guess, did you start with buildings or did you start with single-family houses?
Well, I actually started with an 8-family. The way I got started, let me take you back a little bit. I was in the financial planning business for a bunch of years and did fairly well with that. But I read a book, which you've probably read too, Rich Dad, Poor Dad, back in the day. And that really turned me on to investing in real estate. And obviously, he promoted multifamily, which is small apartment buildings. So that's where I started.
Yeah. No, so it's interesting with your financial planning background. Although I wasn't a financial planner, I have a financial background. I worked for a bank, a very large bank, that managed retirement funds. And I'm talking about, multi-billion-dollar retirement funds for every major corporation. They were essentially a custodian.
Okay.
And my job was to prepare, this was my job right out of college, performance reports, basically performance for the money managers that managed these accounts. And what's crazy is the bar was always the S&P 500.
Yep.
And you start to like after a couple of years, they just got totally dismayed. I'm like, why doesn't everybody just invest in the S&P 500 if everybody's trying to hit that bar and they can't? And in hindsight now, knowing the power that real estate investing can provide for your retirement or building long-term wealth, which I know we're going to talk about today, as a financial planner, did you start to get to a point to where you're like, the Wall Street investment scheme is in fact just that, it's a scheme. There's a lot of other ways to make a lot more money that's right on effectively Main Street, if you will.
Absolutely. I was in the financial planning business during the 1990s, which was the boom times, the market's going up 20% a year, that type of thing. So you're sort of brainwashed with the whole thing. And I like to tell a quick story that of when I had my financial planning firm, I had probably 500 clients. And one of my smallest clients was a guy who invested in affordable housing through single-family homes. And I kept trying to get him to sell his homes and invest in the stock market. And he was much older than me at the time. And he said, affordable housing does well in good times and bad times. And he just continued to plow away. He actually worked at the mill, up in Wisconsin where I'm from, never made more than 50 grand in his lifetime, and was able to retire at 55, making over 60 grand a year with a net worth of almost $1 million by just buying 15 single-family homes, fixing them up, renting them out, and getting the debt paid off as quick as he could. So that turned me a little bit on to the process.
Yeah, it's incredible that I know that I don't know entirely how you feel about traditional education, but I know a little bit, and we probably feel the same way, that it's not necessarily all it's cracked up to be. Not that I take anything away from education. I think it's important to improve your knowledge and things like that. But to basically work your whole life and be trained to go work for somebody else is not what I thought education was when I was growing up. But it turns out, in fact, that's exactly what it is a long factory to prepare you to go work for somebody else typically.
Yeah, it's I wrote a book a couple years ago called Unconventional Wealth, the new Main Street Millionaires. And I sort of talk about that whole concept. I'm like you in the fact that I think college is way overrated. I think you probably have to get the 4-year degree, but you get it the cheapest way you can. This thing about spending $200 grand in a college education is ridiculous, in my opinion.
Yeah.
And you really look at what college does, it leads you right into corporate America, which, maybe works for some people if you're afraid to take any type of risk. But for me, it just didn't work at all.
Yeah, yeah. Well, let's talk a little bit about your background in investing. I know you've played in a number of different roles, and a big part of your investments now, I understand, are mobile home parks. And I've talked to a few different people lately on mobile homes, and some people are just killing it, and it's something that, maybe a lot of folks shy away from because it has a negative connotation in the market. But I know from the fact that I've kind of moved downstream in my rental properties from more of a B class to more of a C class property, that they cash flow far better. And I know that mobile homes can cash flow even better than that. So talk a little bit about, why you transitioned and I guess maybe your overall strategy.
Sure. So I got involved in, like I said, the multifamily business in probably mid 2002. And we started buying some properties up in Wisconsin. Realized nobody was moving to Wisconsin, so we decided to go to Orlando, Florida. And that's where we bought, over a couple of years, 7 different complexes between 64 and 120 units. Liked the business, but it was tough. I mean, the maintenance managers and things like that you have to keep going made it difficult. It's a tough business to manage. And by nature, apartments, turn over 50% of their clientele every year. Yeah. So it's a little more difficult. And we bought all those apartments for the long term, put long-term financing on them, thinking things were going to last forever. And this was 03, 04. And by 06, the prices in Florida were through the roof. Yeah. So I got unsolicited offers to sell a bunch of them. Didn't have them, listed with a broker or anything. And decided to sell them all for top dollar. And it worked out really well. But the problem was I couldn't reinvest in Florida because the prices were too high.
Right.
But the one last thing I bought in Florida was a little 80-unit mobile home park on 4 acres, if you can believe that. I mean, you could put your hand out the window and touch your neighbor. It was that compact. But so I bought that. It was in Lakeland, Florida, and we really liked it. It was much easier to manage than the apartment complexes. And we ended up selling it because we went to North Carolina about, within a year, still made some money on it, but decided we really wanted to focus on that business instead of the apartment business.
Yeah, yeah. And I definitely would like to talk more about mobile home parks as an investment opportunity. Before we do, can you talk a little bit about, maybe for folks that are listening, the importance of evolving in your real estate investment strategy? And I think a lot of folks get in and they think that this is what I do and I'm going to do this forever. And I think a lot of folks that are more veteran have realized that really 2 things. One is you need to be flexible and evolve as the market changes. And 2, the importance of having multiple kind of irons in the fire, if you will, or income streams. Can you talk a little bit about your kind of lessons learned there for you?
Sure. I really encourage people that I talk to start with the single family market just because I think it's the easiest and usually the cheapest to get into, and you get your feet wet and see if you like to manage it yourself or if you even like the business. Like you said, we're all entrepreneurs and this is the way to get into this type of business. But, the apartment complexes were, again, I read Rich Dad Poor Dad thinking that was the only thing. I had no idea what mobile home parks were, wasn't overly familiar with the flipping business, although we've done a bunch since then. But I just felt like, hey, we're going to be here. It's going to be long term. It's going to be great. But then the world changed in 3 years, and you have to change with it. You have to understand that things may never be the same. And I think every couple of years to reevaluate your business, whether it be any type of business, but especially in real estate, and make it fit with the times is really important.
Yeah. And talk a little bit about specifically mobile home parks, like what you like about them, and then maybe how you go about finding an entire park. I know there's a lot of folks that generate leads for single family houses, like for example I do in my business, and we periodically get calls from mobile homes, and we literally say, I'm sorry, we don't buy mobile homes, and good luck to you. Yeah. And I don't know anybody that does, so good luck to which I know a few people that do, but it's never worth the hassle of dealing with that lead. But I know some folks that own parks and mobile homes specifically, and they're just killing it. So talk a little bit about that as a strategy, and maybe kind of as it plays in with the American economy and the fact that a lot of people, need more affordable housing as time moves on here.
Yeah, so the reason we moved over to the mobile home parks is because it's easier to manage. We have 26 parks right now, a little over 3,000 spaces, wow. Being primarily myself, and I have a couple buddies who invest with me. And then we have managers, obviously, at each place. And I have a chief operations officer who handles all the managers. But we moved over because we felt we could grow a lot bigger in the mobile home park space than in the apartment community. Apartments are much easier to finance than mobile home parks because of the bricks and mortar.
Sure.
But the parks are a lot easier to manage. So we have no full-time maintenance people. We're basically renting the dirt. That's the concept.
Yeah.
We try to own the least amount of homes possible. The way the business is set up now, you're always going to own a few just because of the way that there's no financing for the trailers themselves, which you talked about, Mike. Yeah. But so we basically try to do that. But the more we can, rent the dirt, the easier the investment is for us. And the demand for affordable housing has gone through the roof. There hasn't been really a mobile home park built, a new one in this country, in at least 15 years. Most were built in the 80s. The problem now is the land's so expensive, and it takes 40 to 50 acres to get it done, and the infrastructure is so expensive that you're never going to have the competition like you have with the apartments or the single-family houses.
Right. So with parks, somebody told me recently, I don't know if this is true, you probably have the statistic, that something like 8 to 10% of households in America are actually mobile homes.
Yeah, it's a lot bigger than you think it is.
Yeah, that blew my mind.
Yeah, it's again, it's sort of the low level. I call it the ugly stepchild of the real estate business.
Yeah.
But we buy distressed parks, so we've seen a lot of ugly stuff.
Yeah.
But when you get in there and fix them up and you make them a nice community, our turnover average is maybe 10 to 15% a year, some less than that. And that's the key, where the apartment complex is 40 to 50% a year. In the mobile home communities, you can truly make it a community because a lot of people want to stay there. They own their house. They have that sense of ownership. So you really get a lot less turnover, which costs you a lot less money, ultimately making your cash flow a lot stronger.
Yeah. And what part of your business is, in fact, what's funny is I literally just saw somebody give a presentation, a fairly large, and I don't think they don't own parks. They're investing primarily in the homes themselves and seller financing them and things like that. But I learned a lot just a couple weeks ago, so it's going to sound like I know something about this, but it's just because I'm just regurgitating what I heard. Okay. But one thing that I thought was interesting is a lot of parks are essentially you're just land banking. So you own that land, and your hope is maybe down the road. I know some people, the hope is that at some point down the road, maybe you sell that land for another purpose because they were built so long ago, and because a lot of them in some states tend to be in great areas, and cities and towns have kind of built up around them.
That's a good point. I mean, that happens in certain cases. I would say it's definitely a minority of cases.
Okay.
A lot of it's already happened. From 2000 through 2007, a lot of parks got scraped because exactly what you were saying. They were built in the 60s, 70s, right in the middle of town, and the developers came in and took it over. Most of the parks now tend to be on the outlying parts of the city because they were built so far out. Now the city's growing up to them a little bit.
Okay.
But it's definitely a possibility. It never hurts, obviously, to have that as plan B from the land bank standpoint. The problem right now is the cash flow is so good in the parks, it's really hard to sell, even though prices are really high right now. It's just where do you go with the money and how do you recreate that cash flow?
Yeah. And so to clarify, you try not to own any of the homes. You primarily just own the land. Correct.
There's other people in the industry that take a different view of that. They want control. They want to have multiple maintenance guys at each property. I think that's a horizontal apartment complex. I don't like that concept. It's been really good for us to own the least amount of homes possible. It just makes your cash flow that much stronger. And again, you have much more sense of community. Instead of having renters, you have owners.
Right. And so is that, in fact, at your parks, so that was one of the other things that I heard, is that a lot of parks don't allow rentals. You pretty much, they only allow owners. What's your philosophy on that?
You're always going to have a couple rentals. We want the least amount possible, just because of the transient nature of that tenant. But there's a lot. I would say a third of the parks out there, the owners are still into that rental mentality, which is carried over from a long time ago. So certain parks definitely do allow rentals, and we call them Lonnie dealers, people who just own the homes and not the park. And there's a lot of those. You'd be surprised. People own 5, 10 mobile homes, rent them out, and make a couple $100 in each home. It's up there.
Yeah, but you don't disallow that necessarily?
No, we'd have to know the person fairly well to want to do that, but we have 2 or 3 guys that we've known for 10, 15 years that do it with us, and they own, anywhere from 5 to 10 homes in the community.
Okay. So where are your parks at? State-wise, where are they all at?
We have about half of them in North Carolina, and then we've grown quite a bit in the last couple of years. We have 4 parks in Alabama. Okay. We got 2 in Maryland, 2 in the Chicago area, and then we have 3 up in Ohio.
Okay, so you're kind of spread out.
Yeah.
Yeah, great. So tell us a little bit about, back to the importance for real estate investors to maybe have multiple investing strategies, invest in different kind of classes of real estate. And I know it sounds like you do the same. Just talk about, for newer investors, that is, any of the newer investors that are listening, or people that maybe are completely focused on one area. I mean, I guess I'm not a newer guy. I'm probably considered a veteran by most standards, but I literally only invest in single-family homes. And lately, I've always had an interest in multifamily. I'm starting to get more of an interest in mobile homes from some of the cash flow numbers I've heard. But just talk about how important it is in your experience for people to be open-minded to multiple, I guess, classes of assets.
Yeah, and I think you really got to look at where the economy's at. We started buying single-family homes in late 2010, early 2011 in the Raleigh area, and we still have kept probably 20 of the 40 we owned. We sold off 20, flipped them like you guys do. That was sort of a lull in between the mobile home market, where there was a lot of distressed mobile home parks, but they just hadn't got to the market yet because the banks were holding on to them. So we sort of filled that time with the individual homes, which worked well for us. But again, it's just a matter of what you're comfortable with. And I think to have homes, to have some parks, to have maybe some apartment complexes, especially if they're closer to your house, which are easier to manage, that would work well. And the one thing that I did early on, and I didn't really realize this until later, is that I kept selling over a couple of years, like I did in Florida and Wisconsin and a couple of the early parks in North Carolina. I kept selling to get better properties. And I think whether you're in individual houses or apartments, I would recommend that for the newer investor to keep moving up to finally where, we don't have a park that's under 100 spaces. And typically they're 150 to 200 spaces, easier to manage, bigger cash flow, that type of stuff. But it took us 10 years to get here too.
Yeah. And so how do you find a lot of folks that might be listening, they know how to generate leads for single-family houses, and they know how to generate leads. Multifamily seems even harder to find those leads, but at least there are traditional commercial brokers that go through, which I'm sure are involved in mobile home park deals. But how do you typically find mobile home parks? And are there a lot of folks like you that own parks, lots of spaces all over the place, or they tend to be more fragmented individual owners that are just kind of scattered all over?
That's a great question. The primary place to look for the parks is through the brokers. There's Marcus and Millichap, ARA, CBA, Richard Ellis. They all have brokers that are just dedicated to the mobile home park space. Okay. So that's worthwhile. And obviously LoopNet, you can find them. They have a mobile home park section, and mobilehomeparkstore.com. Also, okay. That's all they have is mobile home park listings. Obviously. Yeah. I think there's all the big guys in the industry want to own 100 spaces up. And the bigger guys all want to own 200 spaces up. That's their niche. I think the real niche for people starting out in the market is, select your geographic area and then try to piece together a couple 40, 50 space parks, which are typically cheaper, a lot of times can be bought with seller financing. And you're not going to have nearly the competition for those parks as you are for anything 100 spaces plus.
Mm-hmm. And how much, I know a bunch of multifamily folks, and, they typically are looking for distressed properties because they can go in and almost immediately improve the operations and over time get rents up, but they can usually get costs in check really fast, clean up the property. How much control do you have with mobile home parks to make improvements that ultimately are going to result in, I suspect, higher rents, right?
Yeah.
And how much control do you have over what type of leases do people typically sign? Because I know a lot of mobile homes are, not much less expensive to move than to just buy a new one, right? I mean, they're very expensive to move, right?
Yeah, it tends to be, the cost to move a home is going to be anywhere from $6,000 to $10,000, which most tenants don't have.
Right.
We've never had a tenant who's moved a home out on us because they're mad for whatever reason. That's never happened to us. So it usually doesn't enter into the equation. But from the mobile home park standpoint, we're typically looking for cash flow that's going to be a 10 cap or better, and all we bought is distressed stuff over the last couple of years. I would definitely say that's dried up quite a bit. There's not nearly as many deals as there were. Yeah. But the ability to go in, raise rents. What's happening still right now is you can find these one-off owners, mom and pops, we call them, that have had the park for 20, 30 years, paid off, no depreciation left. The kids want nothing to do with them because they don't understand. The kids just want the money and spend the money. Right. So if you can find those type of situations where you can get some seller financing and you can get into the parks, usually the rents are anywhere from $20 to $75 under market just because they haven't had to raise the rents, so they've done that. Another thing is we submeter all our units, so we pass the water through the resident. We also pass the trash through. So there's various different ways you can increase revenue, and it's fairly easy to get it up $30 to $50 within the first year on a distressed park. But on the other hand, there's also in that distressed park, we come in and we pave the roads. We put in soccer fields. We really try to get the residents painting their houses, working on the community overall. So it's sort of an exchange where you invest in the community, which a lot of times has been neglected. The upside is tremendous. And, you're talking 150 units, and you can raise rents by just sending out a 30-day notice to all your residents because everybody tends to be on a month-to-month lease. Okay. So there's no waiting on staggered leases like it is with the apartment community. So we send out one letter, 30 days, we're going to raise your rent $15. If you're justified and if you reinvest it in the community, you should never get any pushback in that.
I guess you kind of have, not that you want to take advantage, but you kind of have a captive audience, I guess.
Absolutely.
To some extent, yeah.
There's nowhere they can go. I mean, to live that cheaply, a typical, mobile home park lot rent is $300. They own their house. They maybe pay $10,000 for their house. I mean, you can't live cheaper than that in the U.S. right now in some place that's safe and, affordable and clean and stuff like that.
Right, right. We'll talk a little bit about, I know you have a lot of passion for kind of the what you've kind of coined the new Main Street Millionaire, but just about, I think there's a lot of folks in the economy that would probably, they may not use these words, but they're kind of a victim of the system not being there for them. And a lot of real estate investors, and I know a lot of the stuff that you promote is for how people to take control of their own destiny through building, through buying assets and building businesses that cash flow and things like that. Talk a little bit about your views on what it takes for people to build wealth long term.
Sure. The reason I wrote my book, That Unconventional Wealth, is my focus was on this lower half of the country, which I think it's become the bottom 80% fairly quickly as the rich get richer and the poor get poorer. There's this huge group of people that are so used to being kicked to the curb and disrespected and not, treated well. And when you look at the statistics, there's less than a little bit more than 50% of the country now makes less than $44,000 a year, which is really tough to live on when you think of all the expenses and how costs are continuing to go up. So my feeling is if you can get into a niche business like affordable housing, I also know a bunch of people who are in the pawn shop business have done extremely well. The used car dealers who the buy here, pay here, they call that concept. And a bunch of other things where you're focusing on this market where the demand is extraordinary because they tend to be consumers, but all you have to do is treat them with respect and really go out of your way to make it a fair deal instead of ripping them off like they're so used to.
Right.
You get unbelievable loyalty from these people.
Yeah. So for folks that have worked in the corporate world or places where they didn't, they weren't responsible for themselves, their own long-term wealth and stuff, how do you advise them on how to get started with because everything you're talking about is essentially being self-employed. How do people make that transition from working for the man for large parts of their life to taking control? And a lot of folks, unfortunately, don't even have the ability to bridge that gap into not collecting a paycheck for some time as they start a new business.
Well, I think the biggest problem with corporate America is you tend to live to your paycheck, so you don't save any money. And that gets to be very difficult to get out, especially the older you get. It's more difficult. But as I talk about in my book, when you're 55 in corporate America, you get the target on your back. They don't want you anymore. They don't want to pay your health insurance. They're going to find somebody who's half your age, who they can pay half the amount and probably do better work, unfortunately, because of what technology has done. Mm-hmm. So I think you're going to be forced into it one way or another. The thing I love about real estate is you can definitely start part-time, whether you do with a group like Home Investors, which, I think provides a great product, and some of these things, you can buy a couple houses, see if you like them. You can hire a management company, or you can do them yourself, depending on what you want to do. It allows you to get a feel for it, get your feet wet without, making a huge investment. One thing, just as a side note completely, I'm very negative on retail franchises as far as, restaurants and hair salons and all that stuff. I think people need to be really careful with that stuff. Certain franchises like Home Investors and things like that, where you're in the real estate market, make a lot of sense. Mm-hmm. But the retail side of things, I think it's really easy to get convinced that that's a good play, but I would be very concerned about that. But I think real estate's the best business, especially affordable housing, where you get in really hard to make a mistake, and you're going to get some cash flow and long-term wealth if you just keep at it.
Yeah, the great thing about, I don't have any experience with mobile home investing, but I do own a lot of rental properties. And again, my focus now is primarily C-class properties. But this isn't true of a lot of every market in the country. Certainly California and the coasts are tough. But everywhere else throughout the Midwest and the South, West, Southeast, Texas, everywhere else, most of my rental properties are in markets where I'm buying houses for maybe 1/3 of the build cost.
Yep.
Or less than half. I mean, these are cities where they're never going to build again because they can't afford to. It's like driving a car off the lot and you lose value. Whenever I see in some of these neighborhoods where somebody cleared a lot and built a new brick home, it's immediately worth like 60% of what it probably cost them, and who knows how or why they did that. But these are the types of markets that are just going to be rental markets for the most part forever.
Correct.
So the ability to kind of purchase assets in those areas, you're safe from a rental standpoint. I mean, rental rates can only go up from here, and I don't know what your thoughts are, but interest rates are going up at some point. There's going to be some inflation in America, so
I would think there is, and I think people need to be really careful with that, just so they don't get over leveraged. And again, talking about have multiple streams of income and things like that. But what you're talking about is the same with mobile home parks. They haven't built a new one in 15, 20 years. They're not going to build another one because they have this stigma that the communities don't want them and things like that. And they're even in general, you think about all the apartment complexes going up, they're all high-end Class A apartment complexes.
Right.
Nobody's building affordable housing. So, as one of my buddies who is a Wall Street guy and got into this business said, he loves waking up every day when he knows the demand for his product is only getting stronger every day.
Yeah. Yeah. Awesome. Well, definitely appreciate your time sharing your insights.
Absolutely, man. I really appreciate it.
So tell us, folks, I know you have a couple of other projects going on, the Affordable Housing Income Specialist website and some training opportunities. Talk a little bit about how folks learn more about what you're doing and maybe can learn more about you.
Sure. I've been so busy buying properties the last couple of years, and I get a lot of people calling me and saying, hey, I want you to be my mentor, or, send me a manual, let me buy a manual and things like that. So I'm finally getting around to doing that, to helping people out. So we set up a new site called, it's AHIS, Affordable Housing Income Specialist.com. And that site we got a new set of manuals that we just rolled out with some DVDs and some CDs for you. And also a mentorship site where, I'll work with certain people that are qualified, I think, that really want to step in more to the multifamily and mobile home park markets. That's the type of stuff we're going to get into a little bit. One caution I would throw out to everybody is be really careful about what you're buying right now. And I've always gone back to that main thing in real estate is you make money at your purchase. Mm-hmm. And we're getting into low cap rate territory again. And you really need to be careful that you don't make a bad mistake on your first purchase, which is going to really discourage you from the rest of your business. So that's where I think you need some education and some mentorship going forward.
Good stuff. Good stuff. Well, Mike, thanks for joining today.
Absolutely. Appreciate it.
All right. Well, are you a member of FlipNerd.com, the most robust real estate investing platform in existence, where you can find off-market wholesale deals and great vendors literally in your market? You can get access to advice from experts and learn about local clubs and events right in your backyard. If not, please visit FlipNerd.com and register for a free account. You can register in less than a minute. It's pretty much the coolest site that's ever existed in the real estate investing industry. So get on over to flipnerd.com.